the Great Recession. That's according to the Labor Department. Consumer inflation, though, this morning hitting a 6-year high. Our next guest, who is President Obama's top economic advisor, says the economy may be even faster than the government data suggests. Joining us now is Harvard Kennedy School professor of practice and former Council of Economic Advisors, Chairman Jason Furman. Jason, we were very surprised to see this authored by you, an Obama administration official, saying the Trump economy is even better than it looks. What made you write this?
You know, I like to think of myself as an economist who looks at the economic data. And this actually comes out of work that we did during the Obama administration on what's the most accurate way to measure growth. And unfortunately, the numbers published by the government aren't the single most accurate way to measure growth. If you do it more accurately, yes, growth in the first quarter was a lot better than what people thought.
And what about growth in the second quarter, which is already expected to be quite good?
Growth rate is tracking very high in the second quarter. Some of that looks like it's going to be, transitory factors like China bought a lot of soybeans to get themselves in ahead of the tariffs. But, I don't think it's hugely surprising that you do a nearly $250 billion fiscal stimulus, tax cut, spending increase, and you get some extra growth out of it.
What exactly is the official data understating that we should be paying attention to?
So the way the Bureau of Economic Analysis measures GDP growth is they add up all the spending in the economy. That grew at 2% in the first quarter. There's another measure where you add up all the incomes and profits in the first quarter. That grew even faster at 3.6%. My preferred measure is to average the two of those. You take the spending, you take the income. All of it has errors in it, so you average it out, you minimize some of those errors, and that would show us the economy growing at about a 2.8% rate in the first quarter.
So one of the questions that investors are looking at now, is it strong enough to withstand the impact of the tariffs, the ones that have already gone into place and the ones that have been threatened on $200 billion worth of Chinese imports just yesterday?
Look, the tariffs are a negative. We can debate how big a negative they are for the economy. The ones so far aren't a huge negative for growth. The question is the uncertainty about the future ramifications leading to delays in investment and maybe even permanent decisions by American companies. So I think, investors should be unhappy about the tariffs. Just how unhappy depends on just where they think they're going.
Jason, you mentioned, of course, the effects of the tax cuts. And there is a lot of belief that it simply moved forward certain demand. Where do you stand in terms of what we're going to see in year, let's call it 2, of the new tax regime?
Yeah, if you look at both the tax and cut and the spending increase, you saw a big fiscal expansion in the first year, so another fiscal expansion above and beyond it in the second year, and then it drops off and goes into reverse. So I would expect it to be boosting the economy this year and next year and subtracting from growth in 2020 forward. I think what we're mostly seeing is temporary and demand pulled forward. I see relatively little evidence for the type of supply side boost it was designed to provide, but it's still early.
And then on wages, Jason, we're looking for evidence of a pass-through to the worker. You say based on broader research, there's reason to be skeptical that that'll happen. Why?
So far, we've seen a big increase in after-tax profits, a relatively small increase in wages. In fact, wages aren't increasing a whole lot faster than they were 2 or 3 years ago when the unemployment rate was a lot higher. So I think we can pretty definitively rule out the idea that this year's corporate tax cut is being passed into wages. That doesn't mean it won't happen over time. It's certainly not happening quickly, and I have some skepticism as to how much would happen over time as well.
So finally, let's just put a headline on it, Jason. We like to make news here. Are you saying that the Trump economy is stronger than the Obama economy because of the policies?
I'm saying that if you do a huge fiscal stimulus on top of an economy that President Obama left in very good shape, you're going to get a temporary boost on top of it. But I'd love to see more productivity growth so we can have a higher growth rate in the future. We're not seeing that yet.
Yeah. Well, we will see just
I
how
don't know if that was your
sustainable it is.
headline. Sorry.
It was close. I didn't